Hello, and welcome back to the Tax Advisor and Biz Coach Success Podcast. The purpose of these episodes is to help entrepreneurs become more successful, avoid tax and other business headaches. Remember to tune in frequently, as we will be sharing tips, secrets, and expert recommendations in how you can manage your finances, improve wealth, and grow your business. Please like, share, and subscribe. Here's your host, Liz Soria.
And today I have a special guest who's joining me to talk about his expertise and how he may help you. So welcome, Joseph. I'm going to do a little intro about you and your expertise. Joseph Gozlan is a multifamily investment specialist, leading group acquisitions of over $11 million. Wow, whoppy. That's a lot of money. In real estate and providing asset management services to a portfolio of 156 units and growing. Joseph has a BS in Information System Engineering and also currently enrolled with Texas A&M MBA program. Joseph began in real estate investment back in 2005 when he purchased with his wife Rita their first investment property in Israel. Now, in 2007, Joseph and Rita relocated to Plano, Texas, and early 2008 started their U.S. real estate investment journey with the purchase of a duplex in Plano, if I say that correctly. Since then, they grew their portfolio, strengthening their equity positions in multiple properties. So, in 2016, Joseph led the successful acquisition of a 22 units multifamily property in Salina, Texas. And in 2007, Joseph led the successful acquisition of another 102 units multifamily property located in Lubbock, Texas, syndication. He has been serving as asset manager for both communities since, and the recent acquisition of 28 units in Lubbock brought the portfolio count to 156 units. Wow. Well, Joseph's next step is leading acquisitions of even more multifamily communities in the Texas secondary market with the goal of managing an asset base of 3,000 units or more. Wow, Joseph, that's a lot of units. How are you going to do that?
Hey, Liz, thank you for having me on the show.
It's my pleasure. It really is. And what I like to get started is just asking a few questions, kind of think about like the audience would be, in this case, face-to-face with you, perhaps coming up, these kind of questions, because real estate it's a very hot market. And I know that a lot of people out there, even when they own their own small business, as we call it, small business under $10 million. But definitely, I mean, these people always have also some sort of passive income or other source of incomes. And one of them, we know that definitely real estate, it's a major role in people's financial success in their life, right? So let me ask you something, Joseph. Why do you think that real estate is a good investment versus to other type of investments out there?
Thank you for the question, Liz. That's a really good question. Personally, I have researched all the other types of investments. I looked at investing in the market and foreign exchange and annuities and all kind of different things. And I always found myself coming back to 77% of wealth in America was built through real estate.
True.
And there's a reason for that. This is a wealth building engine. If you look at history, right, the market goes up and down in cycles, and so does real estate. But the overall trend for real estate growth is upwards. And the other thing is it's a tangible asset. It's easier to see it. It's easier to control your own destiny. If I buy Apple stocks, I have no way of control of whatever Apple is doing tomorrow, right?
True.
The best example I can think of is JCPenney stocks, right? Before the Ron Johnson fiasco, right? They were up at the $9, $10, $12 per stock. After the Ron Johnson thing, $3. And this is because a board of directors chose a specific CEO that chose a specific path, which I had zero control over. But when I buy a property, and it doesn't matter right now if it's a single family house or a multifamily apartment community, I can control what happens to it. I can screen the tenant and decide who gets into the property and who's not. I can control my price. How much am I charging for rent? I can make sure I got the right financing structure in place. I can make sure I got the right tax structure in place. So to sum it up is I get a lot more control, and then that's one of the main reasons. The other reason is the IRS in the United States have created so many benefits for owning real estate. And it doesn't matter if it's your own personal home or an investment property, there are so many benefits tax wise, and I'm sure you can help the listeners learn a little bit more about that, that it makes it unparalleled to anything else I've seen out there in terms of tax benefits.
Yeah, I must agree with you on that one, Joseph. It's very true. I mean, cost segregation is one of them, but definitely even someone starting even with a single, like you said, single family home or even a condo, right? I mean, they have the option of, having that property depreciated. The funny part that I always tell my audience and my clients is that, for internal revenue services, we look at depreciation, meaning that the property actually is losing value. But it's not true, as we know. I mean, in reality, in the real market value, right, it's actually increasing value. So it kind of is the opposite, but it's a great benefit for anyone investment because of the tax savings and the long-term investments that you can make. Now, you mentioned really briefly about multi-families. How is that different to someone who maybe might be listening right now to this podcast and say, well, where do I start? Should I start with, just, a single condo, a single family home, a duplex? I mean, what would you recommend in those lines? And I know I kind of got you off guard, but I like doing that, by the way. Sorry. So just wondering where you feel that it's definitely for somebody who's just starting. What do you think would be the safe harbor for them to invest based on how the market is as of now?
So I would start with a simple question of what are your goals, right? An investor
Okay.
should invest money with goals in mind. Am I looking for passive cash flow income? Am I looking for wealth building? Am I looking to transition to a new career,
That's
right?
excellent.
Because every one of those objectives would have a different answer. A lot of people think that flips is something they can do on the side, but flipping is a job. It's just an extra job. There's a lot of work in it. So buying a rental unit is passive to some extent. You still have to deal with the tenants and the phone calls and the headache. And if you have a property management company, you still have to deal with them. So
Right.
the real question is, what are your drivers and where do you want to take this to? In my opinion, if you have a business, if you're a business owner, or if you are an individual that has a W-2 job, but it's a highly paid one and you have disposable income, the best avenue is going through investing in multifamily. And I understand that it sounds biased because that's what I do for a living, but I come from the same background. I am an IT senior manager in IT. I've been in IT for 17 years. I had disposable income. I had to find ways to invest my money. And I've started with single families. And the risk and the cost of these things drove me to find something that is more scalable, which led to multifamily. So just a little bit of an example. One of my singles, that same duplex that you mentioned earlier, in 2015, we had to spend $40,000 out of our own pocket in fixing some stuff, and we had a hail damage, and we had a garage door go wrong, and we had to do plumbing work. It's $40,000 out of my pocket, and I was the only person on the line, and all I had to do is rely on my own funds.
Wow.
When
That's
we
bad.
look at Yes, and that was not easy. And the only reason I could afford that is because I knew over the years to save my cash flow for that rainy day, because it's inevitable in real estate. That rainy day will come. There is a little bit of logic. I know it's counterintuitive, but there is a little bit logic in the IRS idea of depreciation. Because if you take a property and you just leave it on its own for 30 years, it will be crumbled by the end of the time. If
Even
you don't
nature.
keep it,
Nature would take over.
yes,
Right, it's
nature
true. I've
will.
seen that.
So that's really why they give the idea of depreciation, and then um, you make it a business, right? All the additions and the fixing and the expenses you have over the years are getting added to your property value over time. So when you go to multifamily, usually it's a group of investors. There is a syndication lead or a group investment leader that has experience in the industry, that knows what they're doing. And that's not always the case. So I highly recommend to anyone that's listening to vet your syndication lead very well, but they know what they're doing, right, for the most part. And
Okay.
then that helps reduce the risk of when I own a single family by myself. The first thing is if I don't have a resident, right, if I don't have a tenant, then I pay the mortgage, I pay the insurance, I pay all the bills. I have to fix it up and clean up between those between tenants, and this is all costs coming out of my pocket,
That's
right?
right.
I bear 100% of the risk.
Mm-hmm.
However,
Yeah.
when we look at a 100-unit property, I could have 10 of them vacant, but I'll have 90 residents paying for the mortgage, for the maintenance costs, for the salaries of the people on site, and so on. So I basically take my risk and spread it across the 100 units versus just one.
And that kind of brings up to me in my mind, as you know, I crunch numbers for a living and so on, and it's really spreading, like you said, the risk and not putting all your eggs in one basket. I mean, that's really what it is, because even though it might be the same building, you have multiple units, so that's gonna kind of give you a little bit of cushion there, like you were saying, where if some units are vacant, maybe because of repairs also, right, or any type of circumstances, I mean, at least you're able to hopefully have enough cash flow to cover for the the recurring monthly expenses to keep up with that property.
Actually, that and more, right? So our underwriting usually have about 10, sometimes between 5 and 15% of vacancy every month allotted, and we still have an opportunity to get enough cash from the other residents to pay our investors really good returns. So it's beyond just keeping it going. It's also we can have 10 vacants on a 100-unit property and still pay our investors great returns every quarter. That's the
Incredible.
power of multifamily.
Incredible. It really is. So here comes my next question. It's a little bit related to what we have just talked about, but maybe if you can just give us, perhaps even another example. What is critical to get it right in real estate industry and to avoid wasting time or money? Because I've seen a lot of people burned during the years with making the wrong investment and finding themselves, not being able to get out of the hole and maybe go even bankruptcy, and things like that. If there's two scenarios where you have one person who has no experience, and like you said, maybe starting depending on their future goals, like you were saying earlier, is how they need to invest. What would you say that to someone who's just getting into the industry right now and saying, yeah, it sounds like it's right, a lot of people agree into this? I mean, how will you be able to waste that time and money?
So I have 3 rules for investing in real estate, and it doesn't matter if it's a $20,000 condo or a 20 million apartment community. The first rule is you make your money when you buy. Buying right is critical in real estate because real estate has a cycle, and none of us has a crystal ball to know how close we are to the top, when it's going to turn, or if we're at the bottom. So buying right is critical. The second one is location, because that's the one thing we cannot change about a property. We can gut a property, we can change the interior, we can paint the outside, we can take 100 or 200 units community and completely change the demographic by the way we market, but we cannot move it around. So location, rule number
True.
2. And rule number 3 is buy for cash flow because hope is not a strategy.
I love
And
that
I've
one.
seen,
Repeat that again. Hope is not a strategy. I like that.
and this is 80% of all the mistakes I've seen done in real estate fall under rule number three, and
Mm.
that is pure hope. And if you buy assuming the property is going to appreciate, if you buy hoping the property is going to appreciate, just buy a $200 airplane ticket to Vegas, put it on red. You'll get your answer faster than waiting, right?
Good.
And real estate is just like stocks. Past performance is not indicative of future performance. So the guys that bought condos in Miami in 2006,
Oh
before the
boy.
big crash,
Yep,
they
I know.
paid they paid $1.2 million for a condo because their neighbor bought it for $800,000 a year ago, and his buddy bought it for $600,000 3 years ago. So it looked like everything is awesome and going insanely up, but everything was going great until it didn't. And that person, 7 months later, into 2007, realized that his $1.2 million purchase is now worth $200,000.
Boy, and that is so true.
So
Because I live
that's
here in
a
South Florida, so you know, and you're from Texas, so I mean, Texas was pretty much also during that years. I mean, they also got hammered, you know, during that area. But I know, I think that if I'm not mistaken, Florida was definitely one of the top states that, you know, we lost more than 55, 60% of value in some of these properties, and Arizona was another one that was definitely really hurt. But I can tell you, I mean, I don't know. In my perspective, I think there's a little bubble going on again in real estate here in South Florida, especially as pricing are it's going up for the past year, Joseph. So things are changing here. So, and here's my final question: what is the best tip for someone struggling to take the idea forward right now? Someone who's saying, "Okay, I have an idea, but I haven't taken any action." What happens when we don't take action, right?
So it's twofold, right? First of all, is educate yourself. There's a lot of resources out there, from books to podcasts to internet communities. Educate yourself. Know what you're doing. Understand the terminology and the lingo and how to calculate the numbers of an investment. The second thing is realize that we are probably nearing the top of this cycle. This is the longest record running cycle we've had so far. Even before 2007 wasn't that long of a cycle. So all the industry experts agree that it's about to turn, but we don't know if it's going to be in 6 months or a year and a half, right? Nobody has a
Wow.
crystal ball. So
Right.
as long as you recognize that you're at the top of the market, and this is where buying for cash flow becomes extremely important, then you should be fine. So adjust your numbers to compensate for a possible drop. Stress test your numbers, right? What happens if I don't find a tenant for 3 months? Can I pay the mortgage? Can I survive the 3 months or the 5 months, right? And know where your comfort zone is in terms of that. And then the other part is you can mitigate those risks by finding a mentor or a partner that can help you through those calculations, through that thought process. Um, and just don't get into the hype, right? HGTV makes everything look
Ah,
very simple. And
that's a good one.
in a 45 minutes show, it goes from a dump to an
Yes.
amazing luxurious
Yes.
house.
Yes.
And
Yes, Joseph. And I'm sorry to interrupt, but you know what? Yeah, that's the kind of home I want to buy. The one that I can just flip it and turn it around in 30 minutes.
yes,
Like the TV shows, right? So, but that's not reality.
unfortunately. Yes, exactly. Unfortunately, reality is not the same. So, just being aware that there are risks and understanding how you can mitigate those risks is probably the best advice I can give a new guy that's going to get started now.
And thank you so much, Joseph, because every single word, every tip that you have given throughout this podcast, hopefully will help. Like I said again, a lot of audience. I mean, we know we have some that they're already, invested into real estate. Others that are thinking about different ideas, and some who are just starting because we all have one day that we want to start. And sometimes listening to experts like you really gives them a good support of understanding that there's pros and cons, and they need to take that all into account before investing. And it sounds like one of them is definitely you to have that cash flow, and that's one of the biggest struggles even for businesses to stay afloat, right?
Absolutely.
Sometimes they have too much debt, and they just don't move forward with knowing that cash flow is the king. So, I want to tell you, Joseph, thank you for spending time, and we wish you the very, very best for making the time to be in this podcast and hopefully in other future ones. And we really wish you a lot of success, and hopefully we can have you back real soon. So, is there anything else you would like to add to the podcast before we get going? And please, by the way, really important, how can the audience know how they can find you? What's your website address, your phone number? That way they can contact you, please.
Yes. So, first of all, it was an honor being a guest on your show. I appreciate it. And I think what you're doing is great and very valuable to your
Thank you,
listeners.
Joseph. Appreciate that.
A couple of things that could help your investors if they're just getting started and they want to look at investing in single families or um, help their spouse see the value. I've written a book a few years ago. It's called The Real Estate College Fund. It's available on Amazon. Um, I don't make any money out of this. You'll see I put it at the lowest possible price point so everybody can enjoy the benefits of what I did.
Wonderful.
And that's out there. That's for beginners. If you want to get into more advanced things or safer things like multifamily investments, we have a website called ebgacquisitions.com. You have all my contact details on there. My email is joseph@ebgacquisitions.com. And I'm always up to talk to investors and network with individuals that are interested in real estate investing. So I'll be happy to help any one of your listeners that might be interested.
That's great. Thank you so much, Joseph. And once again, we wish you the very best, and we definitely will stay in touch. And I will go ahead and put that information. That way people can actually look over and hopefully contact you very soon. So once again, this is Liz Soria, your host, and Joseph Gozlan. Thank you so much, and into the next episode. Goodbye, everyone.